Today I want to talk about how these brokers and trading platforms are desperate for more APE shares, but how AMC has been very specific and said during this new share issue, we won't be delivering more APE shares unless there's a legit sale made. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, in AMC's new issue document in section 3A.5, it says settlement for sales of APE shares will occur on the second business day following the date on which such sales are made. Therefore, APE is actually on T+2. And it says on each settlement date, so on each T+2 date, that APE shares sold through the manager for settlement on such date shall be issued and delivered by the company to the manager against payment of the aggregate gross sales proceeds. Basically saying that AMC won't issue and deliver shares to the manager, aka to Citibank, until they receive actual payment for their actual gross sales. So in this instance, AMC isn't just distributing all 400 million shares to Computershare and letting them deal with it. They're not distributing the 400 million shares to Citibank and letting them deal with it. They're saying, actually, Citibank, come to us with legit sales and we'll give you legit shares. Obviously, when APE was issued, all 513 million shares were given straight to Computershare, and they allowed Computershare and the DTC, or the Depository Trust Company, to distribute the shares accurately and appropriately. Now, obviously, we know those shares weren't distributed accurately nor appropriately, and therefore this time, instead of AMC issuing the shares to them, they're saying, guys, you need to come to us for the real shares. It says settlement for all such APE shares shall be effected by free delivery of the APE shares to the manager's account at the DTC in return for payments in same-day funds delivered to the account designated by AMC. So AMC will only be issuing shares to Citibank or Citibank's account at the DTC when they receive actual payment for actual shares. Now, if AMC or if its transfer agent default on the obligation to deliver APE shares, aka if AMC run out of shares, then obviously AMC won't take any additional money from Citibank or from anyone else. Therefore, AMC will only be delivering these 400 million shares until they've delivered all 400 million shares, and then they won't be issuing any more. Now, I think that's a great move by Adam Aron, obviously seeing exactly what went wrong with APE when it was first issued, and now he's trying as hard as he possibly can not to make the same mistake again. This time, instead of issuing these shares to Citibank or to Computershare, he's waiting for them to come to him with legit orders. He's not just going to be distributing these 400 million APE shares to these brokers for them to settle their IOUs and their FTDs. He's only going to be selling these APE shares for cash for legit APE buy orders. And on top of that, Spencer's noted some very choice contract language between AMC and Citibank on the sale of APE concerning over allotments and the one-time purchase of shares to cover over allotments. So it basically seems like naked shorts are now being called over allotments. So in the Citigroup letter, it says AMC Entertainment Holdings proposes to issue and sell to Citigroup the security specified in Schedule 1 and solely for the purpose of covering over allotments. It says Citigroup shall have the right to purchase from AMC all or a portion of the additional APE shares as necessary to cover over allotments made in connection with the original APE offering. So basically, if Citigroup originally sold more than the original 513 million shares, they can now buy back some of these 400 million shares to resolve their IOUs and FTDs. They won't just be given these shares to resolve their IOUs and FTDs, they have to use their own money to purchase some of these additional APE shares. This basically gives these shorts, these market makers, these trading platforms and these brokers a way to buy actual APE shares to resolve their FTDs. Now, obviously, while it would be good if they don't resolve their FTDs, buying additional APE shares, buying potentially hundreds of millions of APE shares will obviously push the price up. Obviously, if Citigroup have to go into the market and buy all of these additional 400 million APE shares, it will cause the price of APE to skyrocket. Guys, I've also realised that Moomoo is one of the only trading platforms that doesn't have deep links, deep ties and deep connections to Citadel. Moomoo isn't owned by Citadel, they're not majority owned by BlackRock, they don't have ex-Citadel or ex-major bank employees sat on their board, they don't have links with the mainstream media, and they don't accept payment for order flow. Therefore, Moomoo is one of the only trading platforms that is completely separate from this corrupt financial system. And right now, if you sign up to Moomoo using the link in the description below, you can currently get 15 free stocks worth up to a whopping total of $30,000. So this is effectively just another reason why I think the additional APE share issue is brilliant for the squeeze. Not only is it going to potentially cause the squeeze by confusing these algorithms, but Adam Aron actually isn't helping the shorts whatsoever. He's not giving these 400 million shares directly to the shorts. He's not even giving them to the trading platforms so they can cover their IOUs and their FTDs. He's making these trading platforms and making Citibank actually buy the shares and provide him cash. Adam Aron is only going to be distributing these shares when he's received actual cash. Therefore, this share issue doesn't even help the shorts. If anything, it puts them in a more sticky situation. These shorts aren't just going to be receiving free shares to close out of their FTDs. They actually have to spend more cash on top of the cash they've already spent on paying fines, on top of the cash they've already spent on kicking the can, and on top of the cash they've already spent on creating some synthetics. They now have to spend more cash to actually get legit shares to deliver. And I think that's really just proved by this additional paragraph for over allotments and this additional paragraph for the settlement of shares. The fact that Adam Aron has even had to specify that he won't be giving out shares unless he receives cash, and he's not just distributing all 400 million to Computershare or the DTC for them to take care of, shows he knows about the synthetics and he knows about the delivery issues. And on top of that, 741 Trey has just tweeted a new DTC ruling, which is firing shots at clearinghouses. The DTCC has now said that periodically it's necessary for clients of the DTCC and its affiliates to confirm holdings for regulatory compliance or for any other reasons. The DTCC is basically saying that now at any time, for any reason, the DTCC can request any of its participants to prove and confirm its holdings at any time. So from the 29th of September 2022, the DTCC can now at any time and for any reason request any of these reports to confirm their hedge fund positions. This obviously just makes it more and more risky for any of these market makers, any of these trading platforms or any of these hedge funds to have IOUs, synthetics and FTDs on their books for all to see. This basically means there's going to be less hedge funds to pass the parcel and to kick the can, and it makes it more difficult for those illegally acting firms to continue their illegal manipulation. And on top of that, as Breaking Market News tweeted, they said financial institutions are being asked or begged by regulators to avoid trading activity that may create large volatility in the securities market. This obviously follows up Jamie Dimon's recent speech where he said the continued upward trajectory of regulatory capital requirements for America's already fortified largest banks, particularly when not reflective of actual risk, is itself becoming a significant economic risk. And he said this is bad for America as it handicaps regulated banks at precisely the wrong time, causing them to be capital constrained and reduce growth in areas like lending as the country enters difficult economic conditions. Many of these major banks, and obviously the regulators as well, have realised these major banks are very heavily over-leveraged and they're trying to beg them to reduce trading activity that may cause large volatility swings, obviously as it will cause them to breach their capital requirements. These increased capital requirements were made to try and de-risk and de-leverage some of these major banks, which obviously they're not doing and they can't do, and therefore they're going to struggle to meet their capital requirements. Therefore, these regulators are encouraging them not to do anything risky, like not create more and more synthetic shares, because it could end up liquidating these major banks. As the Ace of Spades tweeted, he said, "Apes, it's just like Biggums has been saying. Wall Street was and is not ready for ISDA Phase 6. Jamie Dimon knows everybody's dirty little secrets because he's been profiting from them, and is now only sounding the alarm because he sees what's coming." These major banks obviously weren't ready and weren't prepared for the ISDA Phase 6 additional margin requirements, therefore they're struggling and therefore they're being begged not to do anything that could increase volatility. And as Biggums tweeted, he said, "I mean, the timeline I've laid out over the last 9 months is literally going exactly how I said it would. I don't know what anyone is worried about." He said, "We needed this all to happen, including a massive crash, which is happening right now, as I've also been saying for the last 9 months as well. I've always said, especially since November and December, that a market crash would cause the AMC squeeze, as it will cause many of these largest banks and many of these largest hedge funds to be liquidated and forced to cover their shorts." That's effectively also exactly what happened with Volkswagen as well. The wider market was crashing, Volkswagen was falling with the market crash, but then when these hedge funds were liquidated and could no longer support their short positions, they were forced to cover as they sold off all of their longs. When a hedge fund is liquidated, they're not just forced to sell off their longs and they can keep their shorts, they're forced to close out of all of their positions. Therefore, as I've said, I wouldn't be worried about the current market crash, as it is a good thing, and I wouldn't be worried about all of these new ape shares being issued, as that's also a good thing for the squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.